Hello and welcome to Donut Investment. This analysis is for Micron Technology on NASDAQ as of 31st of July 2026 with a share price of $837. The full report is on donutcyan.ca. An excellent, financially pristine top 3 memory maker at a peak cycle price, a cheap-looking PE on record earnings is a value trap, not a bargain. Real long-term optionality, but you are buying a rich multiple into a cyclical peak. Micron is one of only 3 companies in the world that make the memory chips modern computing runs on, and pricing is the best in its history. Quality scores 80. The balance sheet is pristine. Net cash of about $19.6 billion, a current ratio of 3.4 times, an interest coverage of 258 times, with a gross margin of 84.6% on $41.5 billion of quarterly revenue. Nothing here is broken. The hold is entirely about the price you pay and where memory sits in its cycle when you buy it. Memory is a commodity cycle. Margins swing from the low 30s at the trough to the mid-80s at the peak, and today it sits at the peak, so the roughly 19 times trailing multiple is struck on record earnings of about $44 a share that history says will not last. Score it on normalized mid-cycle earnings, and it trades near 31 times, about 1.48 times what rates and growth warrant, and above the 28 times semiconductor guardrail. Price to book is 9.4 times against book value near $89. Memory tops here and bottoms nearer 1 times book. Fair value lands around $650, below the $837 price. The operating cycle is still hot, but the equity has already turned. Micron is down about 33% from its 1,255 high set in June and trades below a falling 50-day average near 962. The AI and high bandwidth memory upcycle scores 68 as a driver, a genuine tailwind, and the reason the longer-term case exists, but it sits at a peak level and cannot amplify a stock that is already expensive. For a deep cyclical at the top of its cycle, a tape that has rolled over is exactly the signal the framework waits most. The risks here are not hypothetical, and they carry equal weight to the franchise. First, this is a commodity cycle. Gross margins near 85% mean revert toward 30 to 40% when new capacity lands into softer demand, and a Samsung price war would hit the number 3 supplier first. Second, the stock is expensive at the peak, about 31 times mid-cycle earnings, 1.48 times warranted. Third, United States and China export controls on advanced memory are a chronic overhang. The scenario spread is unusually wide, a 1,300 bull if the supercycle extends against a 440 bear if the cycle turns and the whole AI capex cohort derates together. That is real optionality and real downside. Now weigh the risk against the reward. The bull case is roughly 55% above today, the base case, the most likely, about 14%. And the bear case a fall of about 47%. So you are risking about 47 to make 55. So, our call on Micron Technology on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donut Investment at donutcyan.ca. The link to the full report is in the notes below. Have a great day.